Welcome. If you're doing business in the kingdom, then you know that navigating that is an absolute must. Today, we're going to cut through all the complex official regulations and give you a really clear guide. We'll cover your rights, your payment cycle, and exactly what you need to do when, not if, you make a mistake or find yourself facing an audit.
So here's our game plan. We'll kick things off with the ground rules for your relationship with the tax authority. Then we'll get into the nitty-gritty, the day-to-day rhythm of filing and payments. After that, we are tackling the tricky stuff, how to fix errors and what happens during an audit. And we'll wrap it all up with the long-term essentials, keeping your records straight and knowing your rights of appeal. First up, the rules of engagement. Before we even talk about payments and deadlines, it is absolutely crucial to understand the dynamic between you and the tax authority. You can think of this relationship as a balance of power. On one hand, the authority has the right to access pretty much any information they need to verify your taxes, and that includes going to your bank. But on the other hand, with that great power comes great responsibility. They are legally bound to keep your data confidential, only ever releasing it with your explicit permission or a direct court order. Okay, this is a simple one, but it is completely non-negotiable. Your tax identification number, your TIN, is basically your passport in the world of VAT. It has to be on every single invoice you issue and every piece of paper you send to the authority. It's the one number that ties everything you do together. So, you've got your tax ID, you understand the basic relationship, awesome. Now let's get into the actual rhythm of compliance, your tax period and your payment cycle. The system is actually designed pretty smartly to scale with your business. The magic number here is 40 million Saudi riyals in annual taxable supplies. If you're above that line, you're filing monthly. If you're at or below that number, you're on a quarterly or 3-month schedule. It's a really simple way to manage cash flow for everyone involved. But hey, business changes, right? What if your revenue crosses that 40 million riyal line or maybe drops below it? Well, you're not stuck. You can formally apply to change your tax period. Just be aware of the timing. The change doesn't happen right away. It only kicks in after you get that official approval, and it starts from the very next tax period. Okay, if there's one date you need to circle on your calendar in bright red ink, this is it. Your deadline for both filing your return and paying your tax is exactly the same, the last day of the month right after your tax period ends. Miss it, and you're late. It really is that simple. Now, this is interesting. When you send in a payment, the authority has a very strict pecking order for where that money goes. First, they always clear your current tax bill. Always. Any money left over is then used to pay down old penalties. And only after all of that is settled will they apply it to your oldest outstanding tax debts. This makes sure you stay current before you start tackling any past issues. Okay, you did it. You filed your return. But what if you find a mistake? Look, getting it right is one thing, but knowing how to properly correct an error is a skill every single business needs to have. So you've got that sinking feeling. You found a mistake on a return you've already filed. Okay, first things first, don't panic. The key is to understand that what you do next depends entirely on one simple question. Did you underpay or did you overpay? And this is where your responsibility changes, like dramatically. If you find out you've underpaid, a clock starts ticking. You are legally required to notify the authority within 20 days. But if you've overpaid, well, the rules are a lot more lenient. You don't have to file a whole separate correction. You can just claim it back on a future tax return. Now, there is a small exception to that mandatory 20-day rule for underpayments. If the mistake is pretty minor, we're talking less than 5,000 Saudi riyals, you get a pass on the formal notification. You can just roll that adjustment right into your next tax return. Easy. But that flexibility for fixing overpayments, it doesn't last forever. You have a 5-year window to claim back what you're owed. After 5 years from the end of that calendar year, your right to that credit is gone. It expires. All right, let's talk about the topic nobody really loves, audits. Getting a notice of examination can be stressful, for sure. So let's demystify the whole process and get really clear on what's expected of you. The standard process is actually designed to be predictable, not some kind of surprise attack. You'll get a written notice giving you at least 20 days to get ready. The audit itself will then happen either at your offices or theirs, but the key thing is you will see it coming. However, and this is a big however, that 20-day notice period is a privilege, not a right. If the authority suspects a serious violation, something like fraud, or you're just refusing to cooperate, they can waive that notice period entirely and start an examination immediately.
During an examination, your obligation is actually very simple: full cooperation. The law is crystal clear on this. You must provide complete access to your books, you have to allow auditors on site during business hours, and you have to supply any copies they ask for. This is not optional.
You know, the time limits here work both ways. Normally, the authority can only look back 5 years to issue an assessment. But, and this is a crucial deterrent, for really serious offenses like tax evasion or just failing to register for VAT in the first place, that statute of limitations extends to a massive 20 years. For our final section, let's cover some of the most fundamental rules out there: how long you actually need to keep your records, who can be held liable for tax, and what your options are if you disagree with the decision.
6 years. Just burn that number into your memory. That's the absolute minimum time you have to keep most of your invoices and accounting records. The main exception here is for big purchases, what they call capital assets. For those, the record-keeping period is significantly longer to account for their long-term value. The rules for storing your records are just as strict as how long you keep them. They have to be kept physically in the kingdom. They have to be in Arabic, and if they're electronic, your system has to be totally tamper-proof. The bottom line is the authorities need secure, local access to authentic records.
This is so important to understand. Liability for unpaid VAT can actually extend beyond the business itself. If a violation happens, the authority can hold another person, say a manager or a director, jointly liable. This means they can come after that person directly for the full amount of tax and penalties owed. So we've covered the entire journey, from getting registered all the way to keeping your records for years. The real question to ask now is, are your business processes ready for every single step? Because being fully prepared isn't just about avoiding fines. It's about building a business that can navigate the entire VAT system with total confidence.